The purchase commitment, which is a contract that obligates a company to purchase a specific amount of merchandise or raw material at a specified price on or before the specific dates, which is enforceable. This actually can protect the buyer against the price increasing of these goods, and also provide sustainable or reliable source of their raw materials. And the inventory is recorded at the lower of contract price or market price on the date the contract is executed. The purchase commitment was signed someday, and it will be executed later. So on this date, the inventory should be recorded as lower of contract price and market price. The contract price is determined when the purchase commitment was signed, while the book value of the assets will be determined by a lower of contract price or market price. So here there are two agreements of purchase commitments were signed in July 2024. One required the purchase was executed by November 15, 2024. The amount is $500,000. This is a contract price. The next one will be executed next year, February 15, 2025. The contract price, $600,000. The fiscal year ends on December 31st. By the end of 2024, December 31st, the company should make adjustments regarding the purchase commitment. These two purchase commitments, one will be executed within 2024. The other will be executed in next year. The fiscal year ends on December 31st. The first commitments will be executed within 2024. From the contract date to the execution date, if we assume the market price doesn't change, the market price is equal to the contract price. On November 15, the company debit inventory $500,000 and pay cash, or if it is purchased on account, $500,000. The same purchase agreement, if the market price is less than the contract price, we are going to use a lower of contract price and market price at the book value. So the inventory was recorded as a newer market price, $425. The payment is still $500,000 because this is a commitment. And the purchaser, the buyer, will recognize loss on purchase commitment, $75,000. So this journal entry recorded on November 15th. If the market price is greater than the contract price, we just keep using the $500,000. We do not recognize gains on purchase commitment. The next is the second purchase commitment, which will be executed next year. Although this one will be executed next year, but we should make possible journal entries by the end of 2024. The second purchase commitment or contract is also extends beyond the fiscal year 2024. If the market price is equal or greater than the contract price, no entries is recorded. In other words, no adjustment needed by the end of 2024. But if the market price is less than the contract price, the buyer should recognize an estimate loss. In this case, the market price reduced to 540, which is lower than the contract price. Difference was 60,000. So the company should recognize estimated loss on purchase commitment while there's a liability, estimate liability on purchase commitment. This is an adjusting journal entry. We recognize a loss, a liability. Then, on the execution date, February 15, 2025, the company will recognize the 540, which is the market price of the inventory, and debit liability. The payment is contract price. So if the market price reduce, it only reduce the book value of the inventory, but it won't affect the payments because it is a purchase commitment. This example actually guaranteed the loss was recognized in 2024. The reason is because the market price reduction occurred during 2024. And there's no loss recognized in 2025. But if in 2025 there is an additional price reduction, we should account for it. So assume there's an additional reduction in the price from 540 to 510. Remember, original contract price was 600. The first reduction, 60, was in 2024. This is an additional reduction in 2025. So the company in 2025, February 15, should debit loss on purchase commitment. So the book value of inventory reduced from 540 to 510. So this journal entry recognized a loss $30,000 in 2025. The reason is this is an additional reduction in the price in 2025. If this is the case, 60,000 loss was recorded in 2024 and 30,000 loss was recorded in 2025. How much loss on purchase commitment will be recognized in 2024? The contract price was 300,000. Was signed on August 15, 2024. On December 31st, 2025, the market price was $270, which was $30,000 lower. So we should recognize this loss in 2024 using an adjusting journal entry, $30,000. We will debit estimate loss on purchase commitment $30,000 and estimate liability on purchase commitment $30,000 for this example.